Hello, everyone. Welcome to another episode of the Stock Talk podcast here with Invest Like Mike. We're going to have a fun conversation here today. We've got a couple of guests with us here that are investing in the market, and we're just coming out of a nice dip in the market. And then we just got the U.S. stimulus package approved. When I did the podcast with Ben Gallender there a couple weeks ago, we were still waiting for the stimulus, and we were talking in the middle of the drop. So it's nice to have a good follow-up here. And I'm going to just introduce the audience here. I have a couple of coaching students that I've worked with for charting, technical analysis, and strategy. And we have Jason here, and we have Brian. How are you doing today?
Good. How you doing?
Doing well, doing well. Happy to be here.
Having a coffee to stay awake here maybe at
Yeah,
night here?
absolutely.
Okay. Jason, why don't you just tell the audience briefly maybe your name, what you do, and maybe your experience as an investor, just so they get a feel for you there.
Sure. My name is Jason Skare. Work full-time as a firefighter, and I've been doing that for 20 years. Investing, I've been in and out of investing, I'd probably say 10 years, but I haven't really taken it seriously for probably the past year and a half. I've studied charts a little bit, candlesticks a little bit, but it hasn't been until recently. It's mainly been real estate investing, but with the schedule I have and the time, I got introduced to a course, made a lot of sense to me, and sort of just been kind of evolving ever since, trying to learn as much as I can.
Okay, and how long would you say you've been investing in total?
Seriously investing would be about a year and a half.
And
But I have dabbled in the past and sort of tried to educate myself, but I just found that the time commitment didn't work for me. So it wasn't until I found something that worked for me where I really started to dig my heels in.
Okay, so you might have been dabbling with shares and kind of holding stuff over time before that?
Yeah, and with no real science behind it.
Okay.
Apple or something that you're familiar with, but really nothing to really back it up.
Okay, so just kind of taking that Warren Buffett approach, or if your uncle tells you to buy a stock kind of a thing, right?
Yeah, exactly. The hot stock tip of the month.
Okay. Now, just before we talk to Brian here, I was mentioning to you, you're a firefighter. You've been a firefighter for a while. I've been helping with the hiring process for the firefighters, so the physical kind of test that they do with the firefighting. Did you ever have to end up doing that at any point?
I did do the test. The test has changed, but I did do a test, and back it was at York University. But
Oh, you did the York University test. It's different, yeah.
Yeah, back when it wasn't as technical as it is now. It was mainly,
Were
you know,
were you carrying hoses up the stairs and dragging sleds and doing stuff?
yes,
Yeah.
running on a treadmill with the VO2 max, and yeah.
Okay. Yeah, there's a training officer here locally, Larry Jones for Niagara, and he would bring us to the old GM plant, and they would rent out the old hangars, and they'd
Okay.
set up all that stuff that you would do was just set up in this dungeon, and you'd go in there and be intimidated and have
I
to
know it's a lot more involved now than what it used to be. Thank God it wasn't that involved when I got on.
uh, I'm just going to share my screen quickly here. This is actually a little component of the test here. Sometimes I'll swing the hammer around here. So this is actually a live testing here. So there's usually a couple people at a time going through the course, different components, and one of them is just smashing through a wall, right?
Okay.
So there's, I've probably put, I don't even know, like 1,000 or 2,000 people through that test now. I know that like the back of my hand, but to put the weight on and do it is a different story. I'm walking people through it. It's a very, very tough test for sure.
Well, it's a good thing they have a standard at least.
Yeah,
Back
well,
in
if
the
you're
day,
gonna
there was
go,
no standard. Back in the day, you just knew of someone and got on.
yeah, your job's dangerous, right? If whether you're a police officer, firefighter, different jobs that you're doing, you should be trained and able to, do what you have to do. That's the purpose of it, right? So,
100%.
yeah. Okay, Brian, why don't you tell everyone just a little bit about yourself there? I know you're a really busy guy over there as well.
Sure, sure. So I'm a senior manager for a not-for-profit organization that's in the assessment industry. I've been investing probably for about 20 years, but not in options, just very basic. So similar to what Jason was saying, buying, holding, blue chip companies, your Enbridge, your BCEs, and and had my ups and downs through the 2000 tech boom and bust, and through 2008. But yeah, very, 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 very basic trading. Nothing sophisticated, and really just kind of looking at fundamentals. And so options trading, I started trading options probably about just over a year ago, actually, about 13 months ago. And so far it's been great. It's been great learning experience, and happy I've kind of switched my strategy into options trading. So far so good.
Did you guys both end up going and reading the Lee Lowell book behind me here, Get Rich with Options? Is that one of the books that you guys both have used?
Yes.
I didn't read that one. I read the Derek Foster.
Yes.
And I think that was it. Yeah, I read the Derek Foster book.
Okay. Yeah, the Derek, what's that called? Money for
Money. I think it's Money for Nothing.
Yeah. So those are the two common books that are recommended for people to read before going into the options. So
The Derek Foster book I really enjoyed because it's really simple. Like he just writes it so simply that anyone can understand it. Lee's book, you got to read a few chapters over, but they both are valuable for sure.
Yeah, the Derek Foster book, I'll put that in the link of this video too. Both of those are good. And that's why I tell people to read the Warren Buffett way, because you could read more complex books about strategy and investing and just buying and holding stocks. But the way Warren Buffett's book explains it is a great first timer. It's great to read that book. And the Derek Foster book for options is similar as well. So
he did a great job really explaining it in simple terms. I was able to get through the book, I think, on a weekend. And I did open the Lee Low book, but I fell asleep a couple of times. So
we don't want him to hear that.
Yeah, but I've heard a lot of good things about it though.
Yeah, you know what the thing is, if you want to treat this like a business where you're going to put a lot of your time towards it, you want to really, really focus on the Lee Lowell book more. Yeah. If you want to have an intro and figure out what it's all about and see where you want to go with it, start with the Derek Foster book. That's the way I would recommend doing it. And I have a whole pile of books behind me. I mean, you could go as far as you want with it, but it's good to start at the beginner level. I have some guitars behind me. I bought one for $50 at a pawn shop when I bought my first one. I wanted to make sure I was going to use it, right? So you don't have to go to the really complex level. You can start off and make sure that you're actually interested first, right? So
absolutely,
that's a good way to go about it. Okay. Well, I think what we're going to start this off with, guys, I mean, we're sitting here, it is March 17th today, and, when we're looking at it here, the most common topic right now everyone wants to hear about probably is, what just happened in the market and what's going to happen now, because we just had a big drop in the market. We had a big pullback, and I don't know if you guys would agree, but it's kind of the most important thing that has happened recently has been this big pullback. It's overshadowing the stimulus at this point. Brian, what's your opinion on that? We've been talking about that quite a bit. How have you handled the past month or so in the markets, going from, wow, this market's never going to stop going up, to, oh my God, where's this going? How did you handle all that?
Yeah, great question. So it's been a crazy couple of months. I mean, December and January, right? We had the Santa Claus rally, and like you said, everything was just going up and up, and I think just about everyone made a ton of money. But going into early February, we chatted about this during some of our coaching sessions. I thought it made sense, or we thought it made sense, to go to cash, or at least have some cash going into February. So my strategy was to go to cash, to at least 70% cash by February 19th. And for the most part, I was pretty successful in doing that. So by the time, I think maybe around February 21st, 22nd rolled around, I was able to, get in a position where I was 70% cash, and, I was sitting reasonably comfortable at that time. And, from then on, just about until maybe a few days ago, the market was just, more or less on a continual downtrend. So I was happy that I decided to go in cash, and I was ready to take advantage of a lot of opportunities. I mean, it's still pretty turbulent, but it's always good to have some cash available for those down days.
Now, for anyone listening, I have the stock chart for the SPX on here, which is an index for the S&P. When I started coaching with Brian, for sure, we were talking about the post-election rally. November 3rd, I believe, was the election. And then we had the post-election jump up. And it kind of stayed in this channel that I have on the screen until, I mean, really, even right now, it's still in the channel, to be honest with you. But this drop here recently kind of scared people. What was your strategy with this, Brian? Did you just take profits while this was crashing? Did you take profits in the form of cash? Did you go to cash along the way earlier? What did you do here?
Sure. So I took profits. I started taking profits probably around the first week of February, right up until maybe around I'd say about the 16th or so, and just started accumulating cash at that point. There's one or two positions that I got caught in, and I decided to take a small loss. But overall, I think that bull run worked out very well for me. But yeah, it's just about taking profits as you go. And my theory is I don't usually look for home runs. I'm happy to get on first or second base consistently, and so that's kind of what I was doing, and that's kind of my approach.
Okay. Now, in terms of when the market started rolling over here recently, did you have some positions where you took a kicking there and you had to take a loss because you were stuck in them?
Yeah, so I had a couple of positions on Neo. I ended up closing one at a small loss, probably about $600 or $700. And I still hold two possessions in Neo right now that I have a slight loss in, but I'm happy to hold it until it bounces back. And I'm also holding Barrick Gold at a bit of a loss as well, but I'm very bullish on gold overall, gold miners and physical gold. So again, happy to hold it until it rebounds.
Yeah, I mean, gold's very oversold in my opinion. I think people are just buying Bitcoin instead of gold in some cases, to be honest with you. And I mean, some people are probably actually selling their gold to buy the Bitcoin, which is why we're seeing the transfer of wealth there. But that's an interesting perspective there. I think the important thing to point out is that no matter how well you do it, if you try to go all cash, you're going to miss out on things. It's hard not to have some cash still in the market, but there's times where, like Brian did it, where post-election, we experienced the post-election bump, we experienced the Christmas rally, which happens seasonally if there's no other big looming problems. And once that happens, people tend to take their profits in the new year. In typically January, February is a time when you're going to see people start to take some profits. And was that part of your philosophy there, Brian, as well? Like, were you aware of the fact that January, February is kind of a smart time when investors tend to take profits if they're going to take any?
Yeah, exactly. So I knew that. I think this time around, though, a lot of people felt the good times were going to continue to roll on. And, at least a lot of people that I talked to continued, selling puts and throughout December and January and right into February. But, I knew December and January was seasonally strong, especially for tech stocks. So, I kept on riding the wave up, but, I knew that I wanted to take profits and slowly start to deleverage right into, end of January, early February, right? Okay. I didn't know the market was going to come down, but I know historically there was a higher probability of the market going down because, seasonally that's usually a slow period. So.
Yeah, and I always remind people that I interviewed Ben Gallender recently. He said, you want to sell when everyone thinks it's going to go up forever. When you want to just say, I don't like that. I don't like that. Even though they might be right that it'll go up some more, you want to, my friend Andrew that helped teach the course, Andrew Diabru, all throughout January, he kept saying this word to me. He goes, the market is frothy. It is too frothy. He goes, I don't like it. And I said to him, yeah, but it's still going to go up. And it did. But he's longer term minded than me. And he said, I made money from November to January. He goes, I'm good. I'm good. He goes, if I don't make another dollar, I'm good. And if you have that attitude, it's a good way to avoid losses on a big chunk of your portfolio when you've already increased the size of it. And there's power to that because eventually you're going to wake up one day and there's some bad news or people just took profits arbitrarily like they almost always do in around February, March. It's very common, not every year, but most years. And I'm glad that you were able to do that and you had already gone through basically 2 different training courses and you were able to apply some of that knowledge, it seems, into your investments. Now let's roll over to Jason here. So you took a similar course. With my course, it was very recent, whereas I know Brian's been doing the charting since November. So I'm kind of bringing you guys on to have a little bit of balance, right? So that you're at different points probably in your training. Why don't you explain maybe what your experience was? Because first of all, maybe let the audience know, were you involved in the March 2020 drop? Did you feel the pain then? Or was this the first time maybe you saw this happen in this way?
I had a little bit of March 2020 drop, but I was mostly out of the market. And the reason being is I was still trying to learn some techniques and I didn't want to learn with real money. That one stuck in my head a lot because I know a lot of people that got margin called, especially who are newer to options. I think Brian and I probably were in the same course. And of course, chatting with a lot of people, a lot of people got exuberant and took hits. So I'm a very conservative investor, though. I'm never 100% in. I always have something behind, mainly because I just don't want to be in front of my computer all day. But I was about 50% cash when the recent drop hit. So I did okay. I think I was down about 15% on my portfolio, like the really bad day, but it bounced back real quick, which was good. I took a small loss like Brian on Neo. And unfortunately I got aggressive with my expiry date, and that's why if I held a little bit further out, I would have been okay. And Peloton, I got caught with naked put. That one I still hold, but I'm okay with it because it's really volatile and the premiums are fantastic on the call side. So I've been doing really well with that one because it keeps going up and back down. So should rebound. But overall, I was fairly unscathed just because of March. And of course, when we talked on one of the coaching calls, we mentioned about how it looked a little frothy and maybe a good time to go to cash. But for me, I'll never go all in, or I don't even do margin. I don't want to get margin called. I try and stick to that Warren Buffett rule of, keep your capital. Because the way I look at it, for me, even if I'm up, let's say 75% on the year, well, that's wonderful. But if I'm getting aggressive to get 75% and I can go down 50, 60% on a downturn, it's really, and we've been very, very lucky, I think. I don't know, you have way more experience, Mike, and I'm sure Brian does as well. But these corrections have been very quick to rebound. Mm-hmm. And, if we get caught in one of these situations, which I think tech looks like we're in right now, where tech seems to be going by the side, everyone's getting other things, it may not rebound the same. And you could be stuck in that negative territory for months. And I just don't want that. So, yeah, I definitely went to cash based on a lot of your advice, but I was always holding some position. And Neo one stung, but it wasn't that bad.
Yeah. So it's funny. It's funny because I ended up doing exactly the same thing that Jason did. I got a bit more aggressive, and I sold a put on a shorter date, and I got caught with it as well. So it's interesting to hear your story, Jason.
Yeah, it's that's the one thing about this I find is having the information is great, and I think Mike, the way you explain your charting and whatnot, if you practice enough, which you don't need, I don't think you need to practice a ton. Well, maybe it depends on what your level is, but having some exposure to candlesticks in the past and whatnot, I was able to pick most of it up fairly easily. It's having the confidence to trust the chart and make that decision, whether it's going to cash or whether it is, buying the call or selling the put, whatever your strategy is.
Yeah, and just to jump in here too, like, it's funny how, psychology trumps charts. And you can take all the courses you want. It doesn't matter. If you don't have the psychology right, you're done. And that's true for sports. That's true for playing a concert on a stage for people. It's true for anything. Mike Tyson, right? It's all good till you get punched in the face, right? So it's true, right? Everyone has a plan until they get punched in the face. And if you haven't experienced that turbulence before, man, it hurts when it happens. And let me use this as an example, okay? Everyone who got in after the March crash loved the stimulus and was riding that stimulus, as all of us have been since March of 2020. Okay, not March of this year, March of 2020. 2020 we had the drop, and then we got stimulus in April last year. Everyone was happy if you weren't part of that initial drop. Okay, if you were part of the March drop last year in 2020, you probably were scared to put your money back in, and that was proven right now. Because think about it, everyone loved stocks a month ago, and then 2 weeks ago they started crashing, and I don't really hear people talking about the stimulus as much as we should. Mm-hmm. I've been posting it, I've been talking about it, and I've been saying to people, go to cash 2 weeks ago and wait for the darn stimulus. Don't be a hero. Wait for it. And the reason why is you're not going to miss out. A bunch of people just got killed on their positions, and they're going to be too afraid to buy anything right now. And this has proven that the odd stock like DraftKings that took off and you missed it, but a lot of great stocks didn't do that yet. And I really don't think it is too late. And I think that speaks to the fact of this. It's the emotional level for people to be able to grasp it, because we all took losses, whether it's 15%, 30%, whatever we lost recently on certain positions. But we took those losses so that they wouldn't become bigger losses, and so we could put the money back in at a time when we are mentally confident that it should go up, based on a catalyst of stimulus, the charts being all oversold, and you're supposed to buy when others are fearful. Buy when there's blood in the streets, is what Warren Buffett says. Everyone else is now afraid, and everyone else thought the market would go up nonstop a month ago. Right now should be an easy time for people to purchase, except that psychologically you just got hurt. And what do you think about that, Brian? Because you're very seasoned at this. You were in the .com crash. I was in the 2008 crash. So how do you feel about that?
Yeah, and I wouldn't even say that I'm seasoned, because just like Jason, I'm still learning. I'm still in the beginning of my journey, but I have experienced a couple of crashes, right? Like you said, the .com I've experienced in 2008, and I got crushed in the .com. I was only probably 20, right? But I think I was telling Mike the other day, I lost probably $10,000 on one stock, right?
Wow.
Just buying stocks that I did no research on, didn't know what I was doing. And then in 2008 as well, I lost some money, but it wasn't really doing anything that I guess I did do something I probably shouldn't do. I pulled out all my money and thought I could time the market to some degree. And so I pulled all my money out and waited, because I thought the market was going to continue to go down, and it rebounded, and I missed opportunities. So because of those experiences, right, I knew that of course you can't time the market, but I also knew that there's going to be a point where the market's going to turn, right? And you have to have some kind of strategy, right? Whether your strategy is right or wrong, you have to have a strategy. And I think a lot of people just kept on, selling puts, buying calls without a strategy, and just thinking the good times were going to continue to go on forever. And, people that have been in the market for a while know that you're going to have at least a 10% correction every year, right? And it's, again, trying to create a strategy that works for you, right? And like you said, Mike, mentally trying to stick to it, and that's the hard part, right? And I'm still working on that, right? Trying to build that mental toughness, right? So it's challenging, right? Again, you can read all the books you want, but you still need to have that mental toughness to buy when there's blood on the streets, right?
Yeah, it's really, really tricky. It's like, you could try to teach someone how to play basketball and take that easy layup, and they want to dunk that basketball. And it's that temptation of wanting to do that spectacular move, because it's exhilarating when you make a big win or when you dunk that basketball. And with stocks, I said this recently. I'm pretty sure I said this during the course, Jason. I know I said it to Brian. I've said it to a lot of people. It's so dangerous when you get rewarded for doing the wrong thing. And, when the market's running up in a nonstop fashion and every little dip leads to another move up, it's very dangerous, because making the wrong move will always lead to the next up move for you. And then you'll just keep investing that way, assuming you will keep winning until it doesn't work. And that's why, everyone has a plan until they get punched in the face. You're basing your plan on some false logic if you haven't been through the ups and downs before to be able to recognize it. And I think that's what happened a lot for folks recently in general, even people that just own shares potentially. just said to themselves, this might go up forever. And I remember Bitcoin back in 2017, 2016, I was an early investor. And when it went up from $1,000 to $16,000 in 2017, it went higher. But at 16,000, I told my friend, I said, you've been in since $200. I think he was in since. I said, take your profit, like you win, like take half your profits, take something. I said, because nothing goes up forever, and you'll never time the top. So I got out at 16, I went to 19, and then I went to 4. And I didn't know it was going to only go to 19. It could have gone to 30. But the point is, sometimes you have to arbitrarily just take your profits when you are happy. When you're happy sometimes, if you've made ridiculous profits, there's nothing wrong with taking them, even if they were to go higher, because there's other examples where if you hold them, they'll go lower. And, especially with options, I think, at a certain point, especially with call options, the point is not to be an investor to say, how long can I hold on to make the most I can? The opportunity is to take advantage of each major drop and each major catalyst to have big wins in a short amount of time and take the profits. That's my personal philosophy on it. Now, if you want to pick really long-dated call option and hold them for a long time, that's a different thing. But if you're doing what we're doing, which is your contracts are many months, you just want to catch the rally from the November election till January or February, and you're done. And at that point, who cares if it goes up until March 8th? You take your profits, and you can keep some of your money in there, but you should take a lot of it off the table, and maybe even stop all of your call options at a certain point and just sell some put options. Do you feel that's something you're going to try to employ in the future if you already haven't? I'll ask Jason that one because I'm not sure what your strategy's been. But how do you feel about all of that?
That's my. I mean, I'm like Brian, where I try and get singles, and so I will we talked earlier about Moderna, and it was up really nice in one day, and I was going to take it yesterday, and I didn't. And then, learning some of the sort of fundamentals of catalysts, like Jerome Powell speaking today was definitely a catalyst in the market this morning. But yeah, I mean, you know what? I try and look at it this way. My goal is to make 20 to 25% a year without having me stuck to my screen for 4 hours a day. Mm-hmm. If I can do that, then I'm more than happy doubling my money every 4 to 6 years, or 5 to 7 years, depending on. I think it's a smart way because you might hit a couple of home runs, and there's a lot of that FOMO you hear in the market right now where everybody's making money, and I mean it didn't matter what you bought. And I think when Brian, you were talking about that .com bubble in 2000, everybody was making money, and we're seeing that similarities. And I guess I'm more risk adverse, so I tend to take those profits quickly. And I'm always going to have that, like, oh, I should have stuck in longer. But at the end of the day, I think that's a winning strategy than just trying to get every last profit out of it, because you will not. And one thing I've learned about looking at the charts over anything is that, you said it, Mike, and it's a common expression, right? The markets go up like a staircase, but they come down like an elevator. Mm-hmm. And, it could take you 3 weeks to get those nice profits, but 2 days to lose them all.
And it's really true. It totally works that way. And, you have to be mindful of that. And that's why sometimes for folks that haven't done charting much, if you're listening, you might get lost a little bit here. But there's indicators to know when it's somewhat oversold and things are happening on the chart. And we'll arbitrarily say to ourselves, maybe it'll go higher, but I got in strategically early, and I'm going to get out now because I've already achieved my goal when other people might have been not even aware they should have been in yet. And that's what I'm trying to do. And I always use the example, I'm a real estate investor. I think Brian is, I know, I'm not sure about Jason. But if you have a new subway stop announced to your area or an expansion of a university or something like that, you should probably invest in some real estate because you have an obvious catalyst. It's kind of the way I'm taking advantage of call options and selling puts in this way, because post-election, that's a catalyst. Post-large money printing, that's a catalyst. There's all these catalysts you can take advantage of. When they had the tariff war and they removed most of the tariffs, well, then we went up. And if you can learn how to just take it, like for someone like Jason, I'll be honest, I'm not going to speak for Brian, but you just told me yourself, Jason, you're a firefighter. You probably work in some 12 or 24-hour shifts. You got other stuff going on. And you know what? I don't want to watch sports all day. Maybe you don't want to watch charts all day, right? Like, you don't have to take it like a full-time job, right? So if you just invest and spend most of your time paying attention after major crashes and major money printing and catalysts, what a good strategy that is for a guy like you, don't you think?
Yeah, I think it for sure. I mean, I like the idea of being able to look on a daily basis for an hour or so, and then have the opportunity. And what's really nice, obviously, with mobile phones, you can check throughout the day and just look for those pops or if you see it. But yeah, it's a winning strategy when you can sort of look for those catalysts. And I think, like you said earlier, though, it's that psychological aspect to be able to take advantage of it and be able to pull the trigger when the sentiment is down. But you looking at the chart and you seeing it off the 50-day or the 200-day moving average or a major support level of that chart, knowing that, okay, well, yeah, the overall sentiment is down, but this chart looks like it's going to rebound or it's going to find support and it's going to, take off in the next couple of weeks.
Yeah, and you know what? I mean, I'm going to pop up a chart here for the listeners. I'm just showing the SPX chart again for the S&P. With the training course I did in January, Jason was in there. And you remember, Jason, somewhere around here and somewhere around here, we did a couple of follow-up sessions in and around, it was mid-February and late February, basically, right before the market tanked. And in the first follow-up session, I said, well, I don't know, we're getting towards the top of this bull channel. I said, I don't know, maybe it's going to start to go flat and then drop off. The next follow-up session, it went flat, and it was starting to look like it was going to drop off. I'll be honest with you, a lot of people said to me, like, oh, like, how did you do that? I didn't do anything. I just made an educated guess, okay? And I happened to be right. They could have printed the stimulus and the market could have gone up. I could have been wrong, right? But you have to go with your gut sometimes, because I made so much money along the way here, I didn't want to leave it at risk, not all of it anyways. And the weird thing is, at the time when we were doing those follow-up sessions, everyone loved, whether it was Microsoft or Scott's Miracle-Gro, everyone loved those stocks. All of those stocks got so much cheaper now in the past 2 weeks, and the same people that like them are kind of gun-shy to buy them, and I don't blame them because, they just took losses maybe on those same stocks. Like, if you just lost 20% on Scott's Miracle-Gro, do you want to buy it again right away? Psychologically, if you get stung by a bee, you don't want to go near that tree where the bee's nest was anymore. And unfortunately, that's part of the psychology I'm talking about, because what happened was, if you got caught taking a loss, that's just part of the game. Maybe you either overbet or you had no cash, no profits that you kept and you should have, so you could take advantage now. We're never going to avoid all the losses. And, if you work for a salary every year, you know exactly how much you get every month. If you have your own business, it's a different number every month. Stocks work like that. And you're not going to have a consistent $5,000 a month return doing this. It's going to be this much this month. You might lose on different months. And the idea is to be expecting that. If you're a baseball player and you want to hit every pitch, you're never going to make it to baseball, because you're going to beat yourself mentally, and you're going to come down hard on yourself for every little mistake you make. If you do that in the stock game, you're going to stress yourself out. That's just what's going to happen. Brian, how do you feel about all of that? Because I know you've been dealing with that, and I think you've done a good job of it. But how do you feel about the whole psychological game of it, and the fact that stocks that you loved 2 weeks ago, you might hate today?
I think it comes back to really trying to figure out what your plan or your strategy is, right? Making sure that you have a plan, right? So for me, my plan was to go to cash, right? So I did that, and I'm able to take advantage of a lot of what I consider opportunities over the past week or two. So I've been selling puts and writing the odd call, right? So I'm 100% in the market right now. I'm fully invested, right? So to me, it's really having a plan and trying your best to stick to it. But also, again, depending on what your plan or strategy is, for me, I typically will only sell puts on calls on stocks that I actually want to own, right? And sure, I waver now and then. Don't get me wrong. Greed gets the best of me every now and then, truthfully. But I try to, I try to remember what my fundamentals are and my guiding principles, I should say, and, really try to sell puts on those stocks that I actually want to own. So, it's a little bit of that and, not over leveraging yourself and just trying to have a plan, right? Not trying to get too fancy, right? I'm way too busy at work during the day to spend time looking at my phone. So I'll try to spend a few minutes in the evening looking at some charts, maybe considering some strike prices to go in that day. And then, I'll take 10, 15 minutes during the day, step away from work and, sell my puts and then, look at my phone again at the end of the day around 3:30, probably like most of us, and call it a day. But, I got 2 kids, I'm married, and the last thing I want to do is sit in front of my computer all day, looking at charts. So.
Yeah, and what the thing is, the way I teach people, if you can refine it down to a system, you create your watch list. What the first thing I did was, you guys are in my group online for the coaching students. As soon as I heard about the stimulus, I immediately made a new watch list of what does Mike want to go shopping for, basically. And I ended up posting it to the group for everybody. And
I did see that. Yeah,
I made a list of my favorite ticker symbols, and this is sitting in front of me every day now. And I'm going to make sure I watch those, and mRNA is on there, Twitter's on there, a lot of the stuff I bought is on my short list. You should have a short list ready, and you probably noticed right there I've got about 20, 30 stocks on there. 10 to 20 is more than enough. Like, even out of all the stocks that are on there, there's a bunch I'm not really tracking that heavily, and there's others I'm tracking heavily. If you want to track 50 or 100 stocks, my goodness, is that going to be time consuming. You got to check all those charts, you got to do the technical analysis, you have to follow up on them. It's too much. It's too much for me. If you go to a buffet sometimes, there's way too many things to eat. And sometimes you just want to enjoy a good meal. And I just feel like if you create a short list and you become, I'm a specialist at Moderna now. A lot of people are specialists at Apple. You should pick stocks that you get to know the nature of and that you like as well. Out of the vaccine stocks, I actually do like Moderna. I like their chart. I like that Bill Gates is behind it. I like their efficacy. I like the storage capability. I've chosen to like that. They're the first ones to do the booster shot there a month or 2 ago. Brian told me they're the first ones studying to do the shots for children now. I like what they're doing as a business, right? And even though Pfizer might be a bigger company, their chart sucks right now. So I'm not touching that one, and Moderna remains the one I like. I like Pinterest. I like Twitter. I like these stocks because I have reasons, and I've become a specialist at them, and I study their charts consistently. You can't do that with 100 stocks. You can't even do that with 50 unless you're a full-time investor, in my opinion.
Then, I don't think that's possible. But I think that's the biggest lesson that any new investor has to take. And Brian, you said it first, and Mike, you seconded it. But that's probably been one of the challenges I've faced, is finding your groove of what you love, what you like. And like Brian, I mainly do the selling puts, and I'm trying to get more into calls. But the advantage of having the selling the puts at the stocks you like is, if it's a Visa or if it's a Microsoft or whatever, you can hang on to that for a few months. No one's going to come back. When you start getting into the SPACs and everything else and that's the problem, especially when it comes to all the people that in the market right now, and everyone's got their thing, and you're jumping from one stock to the next, and you feel like, oh, I just missed out on that, and you can get lost real quick.
Yeah, that's a great
definitely.
Point. Yeah,
definitely. And you know what? If you're always chasing the next shiny object, it's not a good way to do it. Like, even if you learn to play poker professionally, just chase the good hands. Like, learn what the good hands are and chase those ones. And you have to get to know what your sport is, or what you're doing, and you need, like Brian said, what's your plan? If you're buying a stock and you don't have an exit strategy, that is a horrible way to do it. Unless you're a long-term Warren Buffett style investor. If you're doing options and you don't have an exit strategy for your call options, you're going to be in trouble. With selling of the puts, that's different. But if you're going to buy puts or buy call options, you better have an exit strategy from day one before you buy it. Otherwise, you're going to be in a position like recently where you're just holding them because you didn't really have an exit plan. The plan was, I'm going to sell it way higher and make a lot of money. That's not a realistic plan. right? So it's one of those things. Now, let me ask you guys about charting. So I obviously, enjoy the strategy portion, and strategy in some ways is the secret ingredient that makes the charting work. Because, if you're just always using the charts and always buying every little signal, eventually that's not going to work either without the right strategy. How have you guys used, or what's your opinion of charts and technical analysis? Brian, you've been working with it a little bit longer. I know Jason's still trying to feel it out a little bit more, but I want to get both perspectives. So for Brian, I'm going to end up asking you, how do you feel about it now that you've implemented it and done the course with me for so many months, as someone who, I believe you said, like, you have quite an understanding of it. And then Jason, you still want to sharpen it up and you want to do your thing still, because we just literally finished the course. And so for you, I'd like to get your perspective. Maybe we'll start with you. As someone who's fairly new to the charting, and maybe you're not the master of charting yet or anything, how do you feel about what I've exposed you to with the charting, and how do you feel about the future potential of it? What's your opinion of charts and technical analysis?
It makes a lot of sense. One thing that I'm still it's not trying to understand, it's more like, I can't believe it that simple, so to speak, is when you actually zoom out on those charts and you see some of those long-term highs, the highs of, like, let's say a year ago, for example, or 2 years ago. And when you do see a downturn in the market, especially a major correction, you actually see it hug those resistance levels, support levels. Same with the 50. It's hard for me sometimes to put my trust in it, because I'm like, there's no way that the chart makes that so much sense. But when you start realizing how many people are using charts, it does make sense. But sometimes, like, no, it's not going to catch that. And it does. And you're like, oh my God. Like, it's again, like I said earlier, it's having the trust to pull the trigger, and that knowing what you're looking at is correct. But when you set it up, and you mentioned it during the course, was tell a story before you make a stock call or buy a put, sell a put, have a story. And when you do that, and you're looking at the different indicators, and whether it's the stochastics or the MACD, or whether it's a support level of the candlesticks, or a support level of, like, the moving averages, you're not going to get it right all the time. But if you see that there has been a history, it typically does repeat itself. And that is sort of where I'm still, I wouldn't say struggling, putting my trust into it, because sometimes it doesn't make sense that it makes sense. If that makes sense. You know what I mean? Like, when you look at the fundamentals and you hear the talking heads on CNBC, and it's like the world is falling, and then you look at the chart and you realize it tells a different story. And it's to sort of maybe not pay much attention to the experts, so-called experts, I guess, and put some more trust into the actual charts of the company you like. And that's where it comes down to, as you said earlier, having that group of stocks you like and knowing what they do and how they react. But it really has been an eye-opener, and especially when you take that long-term view of that stock over the past few years, seeing some of those major support and resistance levels, how they still come into play in today's market, or any market.
And I'm going to give you one example, because you mentioned Visa. It's a great stock, and I don't know if you guys, you'll both remember this, I'm sure. Do you remember when Visa dropped all the way below the 200-day moving average, like a month or two ago? I was telling everyone, just load up your trucks, just like buy Visa, right? And, well, I don't tell people, you buy whatever you want, but I was buying it, right? And a lot of people also bought it, right? And for people that aren't into charting, falling to the 200-day moving average is just, it'd be like having a Michael Jordan rookie card that should be worth $1 million, and it drops to $500,000. It's not supposed to do that. Okay, it's Michael Jordan. And Visa is considered one of the best stocks of all time. It's a great stock in most people's books. And when it fell to the 200-day moving average, I posted to the group, I said, I am blindly buying this because I am 1,000% sure that it will be higher very shortly. I actually proved, and I back tested every time it dropped to the 200-day moving average, even March 2020, within X number of weeks, it was rebounding already. And the Visa position that we probably all took part of, or a couple of us took part of here, it rebounded so fast, and it worked as planned. And like Jason just said, it seemed too easy, but it worked. And, I will say this, though. It didn't work a week or two ago when the market was tanking. So you have to not just rely on the charting, but you have to be aware of what's going on in the market. And your strategy should have been not to invest that heavily in February anyways. So, if you see an opportunity in February, you should be skeptical of it. If you see it in December or January, we were happy about it. So don't over rely on the charts either. But when you have the charts and the strategy and the fundamentals all lining up, I call that like a trifecta. That's like a home run. Right now, we have oversold markets and oversold good companies, and we have stimulus, and we're coming out of lockdown, and COVID cases are dropping. That is a beautiful thing to me right now as well. And that's why me and Brian and probably Jason, we're all pretty bullish right now, So I like that you have that perspective, but I don't want you to also blindly believe that every chart signal will pay you. Okay.
I never just rely on one source, but it's one of those things where you just sort of be able to take the knowledge you have and listen to the macro data, listen to the fundamentals. At the same time, it's another weapon. Because if you just listen to the fundamentals, well, the world's going to end. Stocks are going to go down. Tech is done. You don't really have the opportunity to know when to take the opportunity. So with the charting, you're cautious, but you know when the opportunity is there.
Yeah, people gave up on tech stocks. People are saying, Tesla's going to go to 500. It went to 550. It jumped to 700 in a couple of days. I mean, I didn't know that it would do that, but I kind of hinted to people. I said, hey, if it goes to anything that starts with a 5, I said, that's a deal. Like, it's going to turn around pretty quick because do you think, the world loves Elon Musk and Tesla. It's the best electric vehicle company around right now. Do you think everyone hates it now just because the stock dipped? Most of the people don't even own stocks. They just want the car, right? So it's not like all these people that love Tesla all hold shares of Tesla. They're still going to love Tesla. And Tesla's still going to produce hundreds of thousands of vehicles this year. So at the end of the day, the fundamentals of Tesla still matter, but the charting would have told you that you should have taken some profits probably in January or February. And if you did, you eventually were rewarded with a dip. And that's why Michael Burry from the Big Short movie was shorting it. That's why Bill Gates, according to Elon Musk, Bill Gates was short Tesla because they knew at some point that sucker's going to drop a little bit. And it did now, right? And Brian, you kind of came onto that kind of aha moment about, hey, like there's something here with the charts kind of around the election time actually, which was good timing. So you've probably implemented it more and you probably have a higher level of faith in it already, whereas Jason's like, geez, like, is this really going to work? And, he's seeing it in front of his eyes now. I think you've had the opportunity to see it in action a little more. What's your opinion on charts and technical analysis? And is it a part of your investment strategy? Will you invest in a stock without looking at the chart?
Sure. So I think first off, I always still look at fundamentals first and I look at the macro perspective, right? I got to believe in the stock, me personally. That being said, I think charting has really opened up my eyes to really validate either my trades or to really give me peace of mind. And I'll give you an example. I think you posted, Mike, a chart on AMD earlier today. Mm-hmm. And you showed where there was, I think, 3 different points of support, right? And I was never looking at that macro view, right, at a stock, right? I would usually just pull it up, look at the 200, the 50-day average, see where it's at, look at the lower Bollinger Band, the upper Bollinger Band, and then typically, choose my strike price at that point. But now I'm always zooming out to look at, where the supports over and above the 250-day, because, there are times, as Jason and Mike, you guys know that, there are supports outside of the 250-day moving average, right? And then, you're showing right now where there's 3 or 4 different points where there's support for AMD, right? So now I'm looking at those types of things to say, okay, you know what, it's not at the 200-day moving average, but there is support somewhere else. So maybe that's where my strike price will be, or in and around that point. So I think to Jason's point earlier, with technical analysis, you have more tools in your toolbox to make way better decisions first off, right? So I'm always looking at charts first. But what I also like is that it gives me my peace of mind. And what I mean by that is if the stock that I sold a put on or I bought a call on is, going down for whatever reason, I'll look at my chart at some point through the day to see if something has changed. And I'll look at it and say, 9 out of 10 times, nothing's really happened. But had I just looked at my phone, right, I might have got nervous or seen that it's gone down 2%. But when I look at it on, whatever it is, TradingView or whatever platform, I'll see that, nope, it's still above my support or resistance, and it's still business as usual, right? So it validates my initial, the initial reason why I sold the put, and it gives me that peace of mind, and that has helped me a lot to just stay calm, remain focused, because even though I still want to own the stock 9 out of 10 times. Right. Nobody wants to lose money or nobody wants to see their stock going down. Right. Right. No. It's never a great feeling. But when you take another look at the charts and you see that nothing's changed, right, you know that you're still on course. Right. So it's just more tools in your toolbox to, I think, tighten your strike price, know when to enter a certain position. That's helped a lot as well, especially if you're buying calls, right, when to enter a position. And again, just to provide that, we'll say, emotional support when you see your put or your call go south, right? And that has helped me a lot, just keeping me taking the emotion out of it, I guess.
Yeah, and part of the training I tell people is that it's not just the charting, but the chart is a really key ingredient. It's a good catalyst towards my thesis in my investments. And when I'm teaching people the charting, sometimes I'll go candle by candle as part of the training and say, well, what do you think today? What do you think today? What do you think today? Because then in real life, as Brian just said, he's literally doing that because we went through that exercise, and he has all these things in his head that he can analyze it. Now, people listening, you might know nothing about charts. So here's a good way to relate it for you, okay? I like cooking. If you follow me on Facebook, I'm always posting food. And I cook pizza, okay? If you put a pizza in the oven, you can burn a pizza if you don't know what you're doing. It's really easy to do that. Well, sometimes I'm just opening that oven door and I'm checking it and then I'm closing it. And when it looks a certain color and when certain characteristics happen, I know it's time to pull the pizza out of the oven, so to speak. And I'm kind of teaching you on the charts what to look for and when to recognize that it's ready, it's time. And I know I'm oversimplifying it with cooking of a pizza there, but it's true. And, you can go grow a garden and you can water your plants to death, and you got to figure out how to water them properly. And learning how to use the charts properly, learning how to water plants properly in your garden, if you learn how to do it, it's a real skill. It's a real skill. And a lot of people aren't aware of that, I think, with charting. But once I explain it to people, if you're hungry for the knowledge the way you guys are, that you actually want to learn the information, you take the initiative to read a couple of books and study, it does make sense. Just like learning an instrument, when you read sheet music, it looks like, a new language, literally, and you have to learn it. So I'm glad that it's worked out that way for you guys. And I know Brian's, we talked, I think, yesterday or the day before, we just did a session there. And I'm happy that you guys didn't just blindly invest in the market recently, and that you listened to not just me, I'm sure other people, you probably know a couple other smart people that were probably telling you to be careful. Maybe you were even telling yourself. And I'm glad that you followed the plan. And if you don't follow the plan, you have no control over your investment, essentially, right? So you're at the mercy of the market if you do that.
And I think Jason made a good point earlier too, right? Like a lot of people are looking at charts, right? And so it's almost a self-fulfilling prophecy, right? It's human behavior. So if a lot of other people are looking at charts and looking at, the supports and resistance, right? It's probably something you should at least consider, right? Over and above being able to find, entry points and knowing when to exit, right? So, again, just more tools in your toolbox.
And it's funny that I like to keep a good network of people I get along with, and you guys are nice guys, you're smart guys, you're taking extra training to achieve your goals, and you're doing everything. My friend Andrew Diabru from the course, he's in my network of people I keep in touch with. he used the exact same language as you just did, Brian, and Jason brought it up independently. It's a self-fulfilling prophecy. Okay, so is technical analysis real? I guess I would answer yes, but the reason why it's real is because so many other people use it and believe in it. Okay, so I invest in collectibles. You could have a Wayne Gretzky hockey card if you want. Well, how do you know how much it's worth? You see what other people paid for it. So you go on eBay, you see all the sales. Well, as long as they believe that's what it's worth, because that's what they paid, that's what I'm at least willing to pay for a Wayne Gretzky rookie card. When I look at a chart and you see a peak of a rally, well, people are willing to pay that much. And it becomes that type of a self-fulfilling prophecy. So when the market's dropping, we're all watching the 50-day moving average. We're all watching the 200-day moving average. And as soon as they announce the stimulus and we just hit a major support, guess what's going to happen? We're going to run up from that support level, and it's magic all of a sudden. It's not really charts. Charts display human actions, emotions, and investments. It's just a visual representation of what other people are doing. And that might be an oversimplification, but it's true. And when there's panic in the streets, the charts are falling. And when everyone thinks they're going to make money and all their neighbors are going to make money, the charts are going higher. And you can break it down and recognize the moments at which, the little spurts up happen. So it is a self-fulfilling prophecy. And there are algorithms, computer trading, set up on those support levels, set up on the 200-day moving average. That's why charting very often works. Nothing's 100%. So I'm glad that you guys have realized that, and now you're embracing it because, if that's what the smartest people in the industry are using and the computers are using, I might want to take advantage of some of those moments that happen along the way, especially if there's a crash or a catalyst that gives you reason to do so, right? So that's all really, really, really good stuff. Now, we'll wrap this up here. We've been going here for a little bit. I appreciate you guys. We had a lot of good questions there. I mean, a lot of people, the questions we went through, it's the typical psychological questions you might ask yourself as a newer or even an experienced investor right now, right? So that's a good way to do it. In general, just, we talked about a lot of different topics. What light bulb moments or what key pieces of advice, even if it's something simple, what general last word or piece of advice might you have for the audience based on your recent experiences? Anything you want to share, Jason?
I think my best advice to anybody who's looking to get into investing, especially if it's the kind of like charting and short term, is know what kind of investor you are. I know you mentioned earlier, Brian, you're in real estate as well. We're all in real estate. And when I got into it, I had to decide what I'm going to be. I'm not going to be in apartment buildings. I'm not going to, there's so many different ways you can do real estate investing, whether it's student rentals or whatnot. Well, it's the same thing with this. So it's great to have the tools, and you provide those tools in your course. It's how you were going to apply them. And Brian alluded to that, right? Like, what kind of investor are you going to be? And I guess the last bit of advice to say to anybody is, be true to what you want and what you want to get out of it and what you want to do. Try not to get caught up in what other people are doing, because there's a lot of people making a lot of money, and it's very easy to fall prey to those 40-50% returns in 6 months, or even last year where everybody made money. But figure out what kind of investor you want to be and come up with your game plan, as Brian said, and stick to it and ignore everything else.
So I would echo what Jason said 110%, because it's very easy to get caught up in what everyone else is doing and how much money they're making. So yeah, have a plan, have a strategy. I would also add, invest in yourself, right? I'm a firm believer in investing in yourself, education. So, before you even consider investing in options, real estate, or anything else, right? Talk to people, get a coach, take courses, talk to other individuals who are doing what you want to do. And don't be afraid to spend money to learn and educate yourself to get to where you want to be, right? Learn from those people who've made the mistakes and who can help you and who want to help you to get to where you want to be. So definitely everything Jason said, because I think that's very key. And again, just don't be afraid to spend money and invest in yourself, right? Because I think that's the best investment you could make.
And I'll add to that too, because like I'm a fairly experienced stock investor. I've been investing since 2006 at an amateur level in 2006, and I got hammered in the 2008 crash, and that's why I learned everything I learned. But even in stocks, I took a course on options with Lee Lowell. You know, I mean, I still wanted to get the training for the options, and then I soaked it in a quicker amount of time from someone I trust. And by doing that, it allowed me to learn quicker and to have more faith in what I was learning. And with real estate, I have a book here by Don Campbell, How to Invest in Canadian Real Estate. You know, I keep in touch with Don. I'm going to give him a little shout out here. If you buy his book, the proceeds go to Habitat for Humanity, Don Campbell's book. You know, it's good to do that. I even have a cousin of mine that's a real estate mogul in his own rights, and I've had little parlay sessions with him. And I know, Brian, you have a little focus group of people you keep in touch with. I'm sure Jason has that as well, and even in real estate. So it is important to invest in yourself, whether that means monetarily or just even creating a good inner circle of people to then learn with along the way. That's important too, because if you have these negative Nancy's in your ear telling you stuff, you know, charts don't work and stocks don't work and this, you can believe them, but, you know, let's talk to the people that have been making money on it. And at the end of the day, I like that you guys are both realizing that, and it all comes down to you have to have a good game plan, and part of it is training and practicing what you've been training as well. So I'm very, very glad that you guys all have been taking it seriously, and don't go taking risky bets. Don't do anything out of your comfort zone. Jason, if you do start doing call options, I suggest 5 or 10% of your money. Don't go crazy. You know, just get confident. That's what Brian probably did. That's what a lot of people did. And then if you get really confident at it, you know, Jason, you called yourself an old man the other day. I said I got gray over here too, but we're relatively young, all of us. I mean, we can invest for decades longer in our lives here. We don't have to make that money right away. Figure out if you're comfortable first and what level at which you want to utilize it, right? So I think that's all good stuff. Thanks, guys, for sharing your experiences. You've taken time out. I know you've got families and other obligations, so I appreciate your time a lot. And, you know, we'll post this to the group, and maybe if people have questions, you can chip in with a couple of answers there if people post. And feel free to keep in touch with me on everything, because I want to see how you guys are doing as I like seeing people doing well, or if you're not doing well, like in the past couple of weeks, I like helping you understand why it's not going your way, so you don't get emotional about it and you understand it at least. And you guys, even visually as we're talking here, you're not sweating, you're not panicking. This is just part of the process for you guys, and it's very, very clear that that's the case for you guys. So that's a good thing. So, okay, guys, thanks for coming out, and enjoy the rest of your evening there, and let's hope this stimulus keeps sending things much higher, okay?
For sure.
All right.
Okay.
Thanks,
Have a good
everyone.
night,
Take
guys.
care, Jason. Bye-bye.
Take care, guys.